Good morning, guys. This one is again subscribers only. Okay, so I know Paul is keeping things going with the daily streams and obviously more kind of for the public on Trade and View and some of his YouTube streams. For me personally, I've been busy on the house. I've just gone back to the UK for a month. I've come back to France now. But in essence, when there's nothing really to say, I'm not going to waste the time putting videos together, really for no reason at all, with what hasn't already been said. So for me, nothing's really changed in the Bitcoin landscape. I'm still waiting on a larger Aussie dollar trade. I'm quite relaxed about the current situation. And I think in the grand scheme of things, it's all about the confirmation, right? So I'll share a video in the musing channels, right, which takes it back to, I suppose, why you're not trying to catch bottoms and tops. And I'll just emphasize it's only a minute long, but it's actually worth a watch. Most of you've probably already seen it, okay? But just looking at the charts where we are right now, I know I'll probably end up with some questions today. I know people will want to jump on this kind of left, right, and center. So I just wanted to kind of settle the nerves and to cover it in a basic kind of setup and structure and just look at some potential options and ideas and concepts around here. Okay. So, first things first, what I always like to do when I start any kind of chart work is I want to understand obviously the bias, right? So, I guess going back, way, way back, we could see this extension running out of steam, get into that all time high, and dropping like a rock. Okay. Now, in that sense, there's nothing since then has convinced me that this is currently an uptrend. Okay. So, my bias to begin with, in its simplest format, is we're currently down, right? And there's no two ways about it. I don't need a moving average. I don't need any other fancy indicator. I just need to know that we're not in an uptrend. This is still down, and therefore my bias is down, right? And it's as simple as that. What I'm going to do then is jump forward into the next couple of bits of information, right, and kind of gather an intel. This is, I suppose, the investigation phase. Okay. Now, first of all, the one thing I like to do is look at the COT data, right? Now, I know Tristan had shared a video yesterday, one that I'd done probably a year or so ago now, in terms of the channel. If you haven't seen the COT video, again, that's probably worth a watch. I'll probably paste that into the musing channel as well, just so you've got these in a certain kind of order as of now, kind of posting this video. So, in essence, what I'm looking at with the COT, right? Let's flip across to the COT chart first. Right now, although there's dealers and swaps and there's a million different versions of COT. The way that I'm breaking these down is think of an asset manager very similar to a 200-day moving average, right? It's a long time. It takes an awful lot of effort to move it one way or the other, right? And therefore, it's a longer period view of the market, okay? Now, when you look at the leverage funds, I can compare the leverage funds to a 50-day, right? And I'm only comparing this from 50 to 200, just as an example. I'm not saying that they are 50-day or 200-day. I'm saying just as the example in terms of how you'd utilize these in conjunction with the chart. So, in leverage funds terms, right, these guys are going to be a little bit faster moving, but still very slow in the long run. The other thing you have to keep in mind, right, is these charts are a week dated, right? So you're not going to find like for like in terms of, oh, these guys have sold off at this high year and therefore the chart is going to move. You'll have a delayed reaction to this or a prior reaction depending on the size of the shift, right? Because if the markets are kind of dumping and therefore you see, I suppose, composite man leverage funds actually dumping there, you'll actually see it the week before have already happened. Okay. If the moves are relatively small, and I'm talking something like this one in the center here, the moves are relatively small in terms of 6K to 6,200. In essence, that's 200 positions, right? at, I think 5 is Bitcoin, so 5 Bitcoins, right? So again, that's 100K in essence. If we're talking 20K at the moment, that's 100K move, right? So that's not enough to really push the needle in terms of a move, right? Whereas something like this, you'll see a big, a big drop or a big rise if you get these, elongated moves. Okay, so leverage funds and COT, it's not the be all and end all. It's not even the full market view as a whole. What we're actually seeing is a snapshot of US based reportable companies kind of issuing out what they've done and reporting the previous week. Okay, so you're not going to get a full view. You've got other countries outside of the US, obviously, and therefore it's a sample size of what the sentiment in terms of leverage funds are looking at. Okay, so for me right now, I'm looking at this chart and I'm saying, well, there was clearly a bigger gap in and around the end of 2021, right? And this gap is kind of narrowing. So if you were to draw a line from the top, you'll see that the shorts, although it's not really a pretty downtrend, it is actually somewhat of a downtrend. Okay. Now what you'll see is not quite the inverse of that, but from the lows here in what are we, June, April, May, June, around June time here, start of June, we'll actually see the longs starting to accumulate. Okay. So we can easily see an accumulation on the longs and a very, very slow tapering off on the shorts, right? Now, ideally, what I'd like to see is a crossover, right? But again, you don't need that. It's just the fact that these channels are narrowing, okay? And that's good enough in terms of understanding the overall sentiment, okay? So what I'm looking for is obviously to actually get myself into a situation where I've got some kind of bias on the overall situation. And on top of the bias, I've actually got a position knowing what leverage funds composite man is currently thinking, right? And that's in basic form what I'm looking for when I start to kind of unpick these charts. Okay. So coming back now to what I've said over the last couple of streams, right? We've actually got, first of all, let's get rid of this. We've actually got, first of all, a downtrend, right? I like that without any moving average or anything else to tell me we're not currently moving on up, right? We've got a narrowing of the gap in terms of the accumulation phase on the COT data, right? So we're going to go May, June, July, right? So end of May, start of June, roughly here, right? Where we come in from here now, at this particular point, we've got a narrowing of the shorts and obviously an increase on the longs, right? In this. And this isn't, rocket science. This is just kind of giving a picture. So for me, the question is going to be, where are we in the grand scheme of things? Now, this is, like I said, very, very basic, right, in terms of the first phase. This is kind of step by step walkthrough in terms of the mind step, the logic and the thinking in terms of how we, how we analyze where we are as a situation. What we then have, right, is I'm going to take a look now at the advanced get software. So I'm going to click over to this and I'm going to look at the advanced get software. I'll hide this behind. Now, in essence, I'm going to start out on the daily, right? And I'm going to work up then into the weekly. So again, first things first, where we've come from, bigger picture, is a clear downtrend, right? Now, I don't really want to go through and dissect all of these moves, from here to here. I just want to understand where the last kind of big picture was, okay? So if we assume that we've come down and we've had an A, right? That for me is good enough to assess on a bigger picture, right? Because I'm actually looking at the weekly time frame. So I'm going to ignore all the noise and I'm going to look at where we are in terms of the A, right? Now, what you then have to look at is, could we deem this as a B? And yeah, we probably could, right? And therefore, coming down for a C is the obvious next play, right? Now, is that done and finished with? I don't know. So what we're going to do is we're going to step up now into the weekly time frame, right? Because it's going to give us a little bit more info. And I'll come back to the daily in a second, right? So on the weekly time frame, what we've got to start with is, as I said, from the top, we have, let's get rid of this if I can. It's not letting me get rid of that at the bottom. Okay, so what we have from the very top is your 5, right? Coming from this position here, the 5, right? Now, the reason that I'm more interested in the weekly rather than the daily moves is that when I was calling the first top and the blew up the rocket call down obviously to the 28k that we'd marked out already on the charts, in terms of the level, now I didn't like the 0 to 1, the 1 to 2 back, but what you could see as that move started to play out was the truncation starting to happen based on the Fibonacci levels up, right? So when we had this 0 to 1, I really didn't like this, right? And I wasn't in agreement with it. I wasn't willing to trade it, didn't want it, didn't want to know this. Once we started to see this level kind of come in, we actually had a pretty decent 1618, right? So at this point, it was okay, we're ready to go. Now, when you measure out the levels on the fibs, you can actually see that a 3, 4, and a 5, now without knowing the 4, was only going to get us just above these levels here, right? And the obvious reason for that was a liquidity grab. There was going to be loads of new buyers in and around that 5, right? Before having then the bigger distribution. So for me, the first setup of the trade was coming back the 4, right? We were 40 grand with a view of 60 grand being basically trade to trade with a stop loss around, well, below this, right? In these levels, and obviously further stops, deeper stops into this, right? The trade risk factor wasn't exciting, wasn't interesting. A lot of people said, "Oh, this is a once in a lifetime opportunity," and I said, "No, not interested." Right? So I'm actually glad where we are right now because we've come back. We didn't miss a once in a lifetime opportunity. This is a second in a lifetime opportunity. Right? Now, in the grand scheme of things, we've come on down. We have to appreciate that this is a weekly 3, 4, and 5, and therefore we've come down to basically a monthly 4 now on the back of the weekly 5 equals monthly 3, right? Now, zooming out even further, let me get rid of this. This tool's a bit old, so it's a little bit harder to flick back and forth. So coming out of this, right, we have basically an invalidation level, right? Now, if you're pure Elliott wave, you'd probably say, this is broken. I don't like it. I don't like it. I don't like it, right? However, we haven't yet closed below the invalidation level, right? Now, with market sentiment and conditions, we've got, Brexit, we've had COVID, we've had the whole Trump-Biden saga, we've now had the war in Ukraine. Things are pretty bad in terms of the market, but the fact that this still is accumulating around that level, right, it's going to confuse a lot of the pure Ellioticians. Everybody's looking for either 12k or 100k or 6 million if you ask Carl. The reality is just appreciating where we are in terms of the bias, where composite man and leverage funds are currently navigating, right? And this is obviously the narrowing of that channel, and how and why we're actually accumulating in and around this phase. Okay, so I'm taking now this bottom as my A, right? Now, although the advanced get is counting 1, 2, 3, 4, 5, right? I'm not a fan on this. And I think because the software is, again, quite archaic, it's not really appreciating where the bigger swings are on the counter trend trades, right? It's only counting ABC or 1, 2, 3, 4, 5, right? That's the only thing the software is capable of doing. So if we assume an a B, and a C down, right? We're very likely now to have some kind of A, pullback B, and push up C, okay? Again, in this kind of move. The oscillator is kind of suggesting a similar kind of move. Now, logic for this would give us a first target in and around these levels here, right? That's 30k, right? Now, for this being roughly 30k, again, it's understanding where the buy before you sell candles are, the sell before you buys. the auction area where liquidity is likely sat, you're going to have smaller levels of liquidity there because you're going to get a new lot of buyers in and around. You're going to get a lot of stop losses who've taken this short. So there's going to be liquidity in and around this level and definitely in and around this level, which will then only fuel another move back down, right? And this is where you've got your M's, your W's, and so on for a much bigger move, right? So at the moment, the current bias is we're still on a downtrend. Nothing's really changed. We've got leverage funds relatively sideways, accumulating under the radar and getting out of their positions that they probably purchased back here somewhere, right? So for them, it's still profit, right? The reality is they're not going to go and sell up here. A lot of people say to me, well, why do they buy down here and not sell up there? If they sold billions of dollars worth of position, the market would literally do this, right? And therefore, we've had pretty much that slightly further afield, but in essence, it's not a 90-degree drop straight down back into zero levels, right? So at the moment, where we are and what I'm seeing, like I said, nothing's really changed bigger picture, right? We've got sentiment down. We've got composite man leverage funds still narrowing the channel. We've got an accumulation happening on the same kind of plane. We've got the larger asset managers in terms of COT data already with long positions as a net long position overall. So a lot more buys than sells there. But you'd expect that for the longer term, right? For the next kind of move up, the next cycle, you know, I think just as we get there, right? So for me at the moment, it's still focus on leverage funds. So let's go back to the daily, right? And we've got to look now at nothing prior to this line, right? We're only interested, I've put that the wrong place, right? Just this one here, right? So in essence, what we're looking at now is an A, a B, a C, right? Which gives us technically the first three, right? Now, could we argue that there's one, two, three, four? No, not really. There's more than five in there, so you couldn't go five. So we're going to look for a 3-5-5 potential move in terms of the what I would class as now the B move, right? We've come down three, we've come back five. Now there's nothing stopping us going up five, right? And this is where now people will start to get confused because you'll start to see quite likely five wave patterns, right? And ones where if you don't know what you're looking at, they could easily fool you into being, hey, this is the one, right? Now, after the one, you come back for a two, right? So nothing's really going to catch you out if you know in why you're looking at these kind of levels. So let's look at where we are now on this, right? If we go from the low up to the A and back down to the B, right? We were pretty much, although we didn't quite tag it, we were pretty much 1618 in terms of that move there, right? That's close enough in terms of a counter trend move and where the fibs are, right? There's probably a couple in there. You've got obviously the other moves in between the 1% and the 1618. You've got the 27 and so on. So I think for me personally, I'm looking at the same. Well, do I like it? No, still very ugly. We then have the move back down 1, 2, 3, 4. Let's see if this actually clicks in. If there's anything obvious in these levels, it's very, very small. So we've come down 618. Now, let me get rid of the first one there. Let's just get rid of this one. Make it a bit easier to see. So we've come down from the 3. We've come down to the 2, 6, 1, 8. We've come back, obviously 1, 6, 1, 8, and then we kind of fallen on down again. Probably finishing at is, I'm not sure if there's a 4, 6, 1, 8. No, probably a 3, 6, 1, 8 is where that finished. Okay, let me just put that in there. Actually, it's not. It is a 3, 6, 1, 8. Okay, so we've got that kind of level sitting in there. Let's get rid of these fibs again. So at the moment, right, it's pretty ugly in terms of the moves, but on a smaller scale, it is actually quite respectful. Now, what it's actually doing is respecting the ins and outs of the liquidity blocks, the auction areas, in terms of why it's doing what it's doing, right? Now, if you were unaware of this happening, you're very likely to see this as a situation, right, where right now we come in on down and I'm kind of half-hearted going to look at this and say, If it breaks this level, we're down to 10k. If it goes beyond this level, we're up to 100k, and there's nothing in between, right? What we have to break down and appreciate is that if this is a 355, we're likely to see a 5 wave move up. We got the oscillator on a smaller time frame, being the daily, also in our favor, right? And I'm going to flip across now back to the trading view charts, okay? So let me get out of this and into this. Now, in terms of where we are on the trading view charts, right? If I stick on the stochastic, right, we still have a false bar on the daily, right? Let's go into the weekly. In the weekly, we're actually down relatively low, but we also have a false bar. Okay, so I'd love to see a little move on up, right? And that little move on up, even if it is into liquidity or up to the next auction area, right? There's clearly levels at both of these, right? There's another one sitting in there where you're going to get, and that's probably center or near enough center of that auction area. So for me, there's your first logical area, right? And I'm not saying it's going up there. I'm saying there's your first logical area, right? Now, a couple of weeks back, I'd posted the larger scale giant accumulation, this one, right? Now, the logic for me on this, right, is still pretty much there, right? All I'm going to do in terms of my overall bias is basically drag that out and over, drag that out and over, right? And drag that out and over in terms of the time frames on these. They've just literally all moved slightly to the right. Right? Nothing's changed in the actual, vision for this, right? I still feel this is pretty much the move, right? This is the kind of thing, and these are only rough, these are not key levels or anything, right? So the general idea is if we currently see an A around the 0, right? Now bear in mind we're going to have, say, a 3, a 5, followed by a 3, right? Then we're going to come back down, and then we're going to go up, right? Giving us the larger scale B, right? That's currently the thinking, right? And that's how I'm breaking it down. That's why I'm breaking it down. This is what I'm currently seeing, right? So for me, nothing's changed, right? Now, where we are in this as a situation, until leverage funds gives me some kind of indication, right? Or we get a clear, defined breakout, break above, etc., etc. Nothing's really changing my mind. This doesn't feel like an uptrend, right? And even if we say, oh, well, we want to take this from here to here, fine, go for it. Personally, that's not for me, right? And again, I'm going to re-emphasize the video that I'll post into the music channel first. The first video I stick there, you'll actually see why catching the bottom just isn't of interest to me. Okay, I'm more interested and more excited by having the confirmation that these kinds of moves are doing what they should be doing, right? Every little swing is boring, right? Every little move is very difficult to trade, to want to trade, right? Knowing where to place stops, etc., etc. If you guys have joined to become professional traders, you need to appreciate confirmation is key, right? And I can't stress that enough in terms of confirmation being key, right? Otherwise, you're back into the gambling territory. It's what can we do? What can we see? Can we catch the bottom? Can we catch the top? And can we catch every little swing and every little move, right? That for me just isn't exciting anymore, right? So coming now into this weekly time frame, right? One of the things I spoke to Paul about was where we are in terms of the liquidity levels, right? The move up, right? So we've come up, back down, the move up to come back down to go up again, right? It mimics what we've talked about with the giant accumulation. We go up to come down to go back up. And at that point, we'll start looking at key levels, etc., etc., right? But this is why I'm saying nothing's changed, right, in the grand scheme of things. Let's put some of these on. So key points. Now, if we break this down for where we are in terms of the overall schematic, what you now have is a rally into an STB, moving on up, right? You got your first sign of strength. You might come down for a spring, or it might come relatively sideways, and then you go up again, right? Now, if I put this back on in terms of giant accumulation, it's no different, right? We're going to go up, we're going to come down, and we're going to go. All I've done, look, is just dragged it from right to left, right? So in theory, I'd be seeing that going up there, then back down, and then going again, right? So one way or the other, it's it's not doing anything unexpectedly at the moment, right? Um, Step levels, all of these levels, these go back October last year, and these levels are pretty much relevant. You could see the auction areas were formed, why these key levels were there. Um, they're just there at the moment, just for me to, remember where we are and kind of highlight some of the key points, especially on the way back up, right? Because these areas will be also affected on the way back up based on previous areas of interest and liquidity kind of pots and pools. So step levels, this was obviously the daily wake off. Let's see what else we had. The target areas, this was the point and figure targets. Pressure zone. So again, on the way back up, we could easily expect some movement in and around the 29 to 33k. There's going to be obviously an auction area in there, liquidity in and around here. The center of this, so around 40, 41 and a half, expect a little bit of movement there. And again, if we break through this, my next target would be up and around here. And that really would be where I'd see potentially the B move starting to form. We could easily see a move on up, A, back down B, followed by a C, right? And I'm going to stick with my guns on this one, right? I think for me, the bigger picture B move could easily be in and around the 49 plus K, kind of confusing people into buy-in at that kind of half of 150k, magic level for retail traders. So I think for me, that's again still on the table in terms of bigger picture. The interesting group, these were clearly the levels from last year. It's been respectful, right? And I think that's the bit that I like more about this is we come into uncharted territory. We've dropped kind of from them. You see where the miners have actually been, used and utilized. How we've come through into tag liquidity, kind of back up again, right? And I think actually yesterday I was looking at one of the posts that let me see if I can find this post quickly. So I was looking at one of the posts yesterday, and again, this is kind of like the logic because it's not so much to say, hey, guys, look, I'm right with this, and these are the calls that we're making. I think what I like more about these is the fact that it's becoming respectful, right? So when you see these kinds of levels, right, the idea in this was knowing where the money sits, right? So you've got liquidity up high, right? We were expecting obviously to move on up. Coming back down, you've got the first key level, right? So this would be the first like redistribution into then the larger play, right? Now at this point, you're not trying to call where it goes from here. You're basically saying, hey, this could go up, this could go down. This is where the area of interest is in terms of the previous auction areas, right? So playing that forward, we moved obviously into liquidity, tagged liquidity, grabbed that liquidity, right? Now, as we come on down to these levels, we kind of flew straight through this, right? So for me, this year was actually no liquidity in that, right? This was nobody challenging the move at this particular point, right? So what I was hoping for is the consolidation and then back down into redistribution. And instead, we actually had that move that I was expecting in here at the lower levels, right? So this is where knowing your bias, right, at this particular point will give you opportunities to trade up or down, right, based on these levels, right? So knowing the money and knowing where the liquidity, the money is sitting is kind of crucial, right? So the reason that I wanted to highlight this, right, is this isn't one that I traded. This is one I just kind of put out to the public without really much explanation. I want to explain to you guys, in terms of the subscribers, why this is key, right? And why you're looking at these kind of key levels, how you can identify these key levels before coming down into again key levels, right? And then basically taking it from there, right? So understanding all of that and everything I've just tried to put together. I know this has been more of a ramble and a rant this morning in terms of this, but I really wanted to emphasize nothing's changed, right? Where we are, kind of big picture, nothing at all has changed. We've got a downward bias. We've got COT data giving me hints of an accumulation phase. We've got the Elliott wave kind of key levels in and around kind of liquidity, and understanding then the liquidity, as I just showed you in my last post, where the money sits, right, is understanding that you've easily got these levels here, right? Let me change that color to something bright, make it quite thick. I'll put it flat. Okay, so you've got the next level, kind of, you've got a small one sitting here, right? So at the top there. And the reason for it is that there are going to be buyers at this particular point because it's taken out a new high or taken out the previous high, right? Creating a new high. And you also got people that have put stop losses just above these levels for the short that they'd entered, right? Now, the same thing is going to apply down the bottom here, right? You've got a key area down there, right? So you could easily come in, tag below, grab the liquidity and up into the next zone, right? Now, that's the kind of thing, if you understand, you can trade this, all day, every day, if you wish. The reality is when you know not to go looking for the bottoms, the confirmation is going to give you a better entry with a much bigger risk reward ratio because you can go in with confidence. Okay. So again, the reason for me doing this video this morning was more to do with the thinking and the logic behind where we are and why, rather than the way we are going next, right? Although I've covered some of that with obviously this giant accumulation move, ultimately I'm sticking with my guns on that. This is where we are. This is why I think we're doing what we're doing, and therefore, do I see us go into 12K? Probably not. There's not really that much logic for 12K, right? If I look back at this, I've said, all along for me, prior to the 2020, as a 2017 move, there was no real, institutional money, right? They were VCs, they were kind of angels, right? Now, you got this obviously little wick here in and around these levels, right? Which is the only little bit of liquidity that I think you could grab there. You've also got this in terms of the candles, but I think we've already mitigated that as these levels here. Okay, so in the grand scheme of things, do I see it coming to 12? Probably not, right? It could, right? But if it comes to 12, I think my whole bias in terms of the Elliott situation changes, dramatically at that point. I think if we come to 12, we're in more trouble than we actually realize. Okay, so I think right now we've got this giant accumulation. We can come down into the schematic. We can go kind of smaller schematic inside the schematic, and we can actually look at probably now an accumulation within an accumulation in that particular point, right? And the reason that I say it's accumulation within accumulation is that if we look at where we are from an ST level or even an STB, right, because it's going to be one or the other, then in theory, from an ST or an STB, you're expecting to move on up in any which way. Okay, so again, liquidity above 25, liquidity again 28 to 30K region. So I think for me, if I was to take a shorter term trade, I'd be looking at confirmation on entries in and around these levels, buying the pullbacks with a view of taking this up to these kind of zones, right? And that's just the shorter time frame, but that's really the accumulation, like I said, within the accumulation, because this is the ST or ST and B, which means in the grand scheme of things, we're actually relatively early on in a much larger accumulation phase, right? So from the SC and the AR, right, I kind of like both of these. Let's just assume that this is the ST sitting at this versus the SC, right? Then ultimately, if we were at this particular point, like I said, we've got to move up, we've got to move back down, we're going to have another move back up, sign of strength, we're going to come back down, spring or no spring is kind of the question, right? And then at that point, we're able to go. So we can easily, elongate this out for another, 6 months, 9 months, 12 months. It's not going to matter to composite man. What's going to matter to composite man is that they accumulate the position they're actually looking for, right? And going back to what I started the whole conversation on, is that really that it comes back down to the leverage funds situation. That to me doesn't look like accumulation and profit taking has actually finished just yet. All right. So, like I said, I know this one's a bit of a ramble, but hopefully this helps some of you guys at least. And feel free to ping questions and comments and so on in the chat. Apologies, obviously, for not doing too much at the moment, but if there's not nothing to say, I'm just one for not saying it. So therefore, there isn't really that much to talk about. Grand scheme of things, we're doing what we're doing, and this is currently the situation. I think last thing, obviously, I know some of you guys are keen on the FX pairs, right? And one of the things that I've obviously emphasized in the last kind of year is that my real interest is in obviously Aussie dollar, right? Now, part of the reason is when I done the first FTMO challenge, I put all my eggs into the GBP, JPY, the Dragon, the Widowmaker, right? This was a bugger of an instrument to trade. But I spent a lot of time kind of playing with it, right, and kind of understanding the character traits. And what I realized by doing this is that I no longer wanted to trade lots of instruments, right? It wasn't until doing this that I kind of truly appreciated kind of mastering one or two rather than trying to trade, and at the time I was only trading maybe five, six at the time. But I think really appreciating what you can do and how you can do what you do when you understand the character of an instrument, right? When you understand the pair, when you know what you're looking for based on certain candles, certain moves, little traits. It's almost like learning a language, right? And you're not going to go and learn, Japanese and Chinese and Mongolian, all in the same week, right? You're not going to give yourself much of an advantage by doing that, right? Although it's plausible and it's definitely possible, you're kind of making it hard for yourself. So I think for me, what I realized by doing the JBP JPY was the emphasis on really knowing the instrument, right? Now, what I like with Aussie dollar compared to, let's go through some of these, right? What I like with Aussie dollar, right, compared to GBP JPY is GBP JPY can move really fast, right? Very, very violent in its moves. Aussie dollar and Kiwi are pretty much the same, right? They kind of go hand in hand. You sometimes get an advantage by following the New Zealand dollar. Other times you get the advantage by following the Aussie dollar. But, they're kind of the same trade, right? It would make no sense at all to have a long on one and a short on the other, right? At all. I think the Euro JPY, because of the safe haven aspect of the yen and the volatility currently on the euro, right? And again, a lot of this is kind of driven by what we have for DXY. That obviously is the driving factor with the euro, and euro kind of driving DXY. Is that we've got the uncertainty, we've got what's happening in the Ukraine. We've seen obviously euro US dollar come down below that zero level for the first time in years. And I think the reality is the uncertainty right now with more of the stable kind of currency, so the euro and the Japanese yen technically always having the historic value of being relatively stable. The uncertainty right now, it doesn't make it a confidence kind of building type instrument for me in terms of the trade. Euro USD. Now, often this has the smallest number of spreads. This is the smallest, the cheapest in terms of being able to trade it. And therefore, a lot of retail traders jump in it thinking, well, it's cheap, I'll trade it. The reality is, Composite Man knows this, right? And therefore, it's very easy to get trapped into something that can kind of change and shift and really, really motor on the smaller time frames, right? We then have GBP USD. If I'm honest, the reason I don't like this one is again very similar to the Euro USD to start with. It is kind of an introductory pair. If you're new to trading forex, it's something a lot of brokers will have as a default chart. Normally MT4 will come with Euro USD, GBP, USD, USD, JPY, and sometimes it'll be USD CAD or USD Swissy. So in terms of the kind of default mode, I haven't really been a fan of the situation with GBP since Brexit, and I think in the grand scheme of things, again, kind of uncertainty because I don't think the whole Brexit COVID kind of saga had done each other favors in terms of the pair. So I think there's still a lot of ironing out to do with GBP as a whole, and therefore taking that against the dollar with such a strong DXY right now, it's just again not really a confidence builder in the grand scheme of things. I think coming back to Aussie dollar, what I like about that is that there's less news that really impacts the moves as a whole. Okay, I think overall, then, I mean, Euro GBP, again, similar situation, the uncertainty in Europe, kind of confusion in the pound. So I think, I'm kind of staying clear of a lot of these and therefore kind of defaulting back to the Aussie in terms of the bigger move. Okay. So where we are in terms of a situation, let's come into the other crypto, right? So this is the other COT. Now, in terms of the other COT, what I'm seeing on this at the moment, let's just go into the leverage funds. It's pretty similar. The sell off in terms of the short is a downtrend. The accumulation is ultimately an uptrend. We've got a crossover followed by a narrowing of the gap, right? It hasn't quite finished yet, which means there's still selling pressure as a whole and not really enough accumulation kind of as a whole, right? Why does that come on there? Okay, so in terms of the current situation, you can see how I've marked up the first bar based on the auction area. We've come into the auction area. I've come down a time frame, right? And then I've come back across on these time frames to look at where we are on the 50% marker, right? Probably even smaller. I've probably done on a 12-hour looking at this. And then basically put a box within a box in terms of the area of interest and kind of why, right? So in the grand scheme of things, I've got a narrowing of the COT data leverage funds, very similar to the COT on the Bitcoin situation. I'm going to look now at the stochastic, right? We've got a false bar still there. So for me, perfect opportunity in terms of accumulation, kind of, sell off, buy off in terms of the under the radar type of play. We've got a relatively strong dollar and people thinking, this is recession, this is where we're off to. We've actually only recently come in on the weekly time frame into the oversold situation. So we got a very steep move in there. We still got a false bar, right? So I'm not going to expect anything anytime soon in the grand scheme of things. And on the monthly situation, we have a slightly more graded view. This is kind of curved, if you will, as we come on down relatively sideways, right? Which gives ample time for decent levels of accumulation in and around these zones, right? So again, we're kind of close towards the end of the month, for a couple of days. I'm going to follow probably the weekly in terms of this for a time frame right now, but I kind of like this in terms of the current situation, an accumulation phase, whether or not we had the first, and there's a couple of things, right? Because on this one, we could have classed this obviously as a nice AR. That would have been the optimal AR, followed by, the STB, and we could be looking at a spring. I just don't think we far enough along, right? And this is kind of wishful thinking rather than, practical logic. So I think for me, in terms of the current situation, if I was to say that we've got some kind of, L there, we've got some kind of move back up, which is technically the change of the character, followed by maybe the seller's climax, right? There's kind of an option, right? Now, again, I'm not saying this is what it is. I like the seller's climax in the kind of area that we're at. The other option could be that this was the seller's climax, right? So this could be the seller's climax here, followed by the AR, right? Like this, and then coming down to ultimately the first ST, right? So there's a couple of different options in and around this, but at the moment, I'm kind of speculating rather than having any kind of confidence in terms of this as a move. Right now, if this is a big trade, this is a move that I'm expecting to rally 1,000 pips plus, then realistically, I'm looking for confidence rather than guessing where I am right now. So at the moment, I'm going to let the charts kind of tell me more of the story before I make my mind up in terms of where we are, why I think we are where we are. And therefore, in the grand scheme of things, knowing what happened with the COVID and March 2020, April 2020 type situation, a lot of the other instruments are comparable in terms of the overall situation. So right now, it's still that I'm not quite sure where we are. I'm not really interested in terms of taking a position or holding a position. We are at a kind of a key level, especially with Aussie for me, and therefore my interest is kind of starting to grow. So I'm not going to jump into it. Like I said, I'm going to definitely post the video that I've been referring to all through this particular stream. And I think you guys should spend at least a minute watching that video to give you the understanding as to why I'm not looking for the absolute bottoms in Aussie or in Bitcoin. Okay. So, like I said, I'm sorry for this one being a rant, but I hope you enjoyed it. And like I said, any questions, please stick in the chat channels. Cheers, guys. Enjoy the rest of the week.